Howdy, Jacob here. Today we're looking at Baidu, company 100 in our generic stock screener, another company out of China. This one's been compared to maybe a Google of China. I've looked at their numbers, looked at Google's. I think, I'd be more impressed with Google's, but I do think that Baidu has a lot of room in the interactive media and services industry. They're, the best search engine out there in China that they use. They're really big into self-driving cars and everything. Incorporated in 2000, so they're relatively new actually. And growth over double over the last 10 years. We see gross margin and operating margin down, similar to how we saw Alibaba a little bit earlier. Their margins are up though from about COVID when there were some short-term hits, likely short-term hits, but there are, big hit to return on invested capital due to that as well. And I mean, this balance sheet is beautiful. Look at this difference in market cap to enterprise value. It's almost half. Enterprise value is almost half. So they have $27 billion in cash-like products. That's cash and equivalents and short-term investments. And they have just $10.7 billion in debt. So that's why their enterprise value is relatively half their market cap. So their cash flow statement shows use of cash, heavy on the reinvestments. You'll love to see that. Although the company's return on invested capital right now doesn't look very good, it is one due to just lower earnings due to the fact that they had to make some one-time payments, and China is also has been in a I don't want to say recession sounds bad, but I mean, yeah, pretty much recession-like, I guess. So they're still reinvesting to get this type of growth, and reinvesting back to get growth is taking money now to hopefully make a lot more later. And so I think that could be a great decision. Their free cash flow margins do look a bit higher than their net income. They repurchase a tiny bit of shares, not nearly as much as what we're seeing on the Alibaba side, but maybe a little bit. I'd say almost everything is just going to reinvest back into themselves, which is fantastic for them. But we will see a little bit of issuance of shares due to stock-based compensation being so much greater than their share repurchases. So let's start making some assumptions here. I think, China in itself will likely grow 4 to 5%. And I do think, although Baidu is already a larger company, I think that they are better than the average company there. So even being conservative, I think 7% is honestly very reasonable to me. I think that they are still a Chinese company, so maybe market average seems to make sense, even though personally I think their growth will be a bit higher. And I think they are a better company. I think people really are taken back by just working and getting most of your revenue from China. I think that's hesitant for a lot of people. For margins, it's been down recently, but I do think that there is capability of getting back to those 20% ranges. So let me just do a wide range here. And then for share changes, I mean, relatively flat. They've been issuing a little bit. Stock-based compensation is about a little under $1,000, buying back 200, 800. Yeah, maybe let's say they increase share change about 1%. Again, that's just looking at stock-based compensation, what they're repurchasing, what is that in comparison to their current market cap, and then making an assumption from that. So we're saying the company's stock price needs to fall 9% before you get the price you're looking for here. I think if you incorporate the cash that they have on their balance sheet, this could absolutely be a fantastic investment since, again, their market cap is double their enterprise value. So basically, that would mean if this price to earnings or price to free cash flow were based on enterprise value, rather, I mean, you're looking at a very good buy right now. And so do your own analysis, see if it makes sense for you. I think that Baidu's another great company. And, I think now is possibly an appropriate price point, but you're going to have to balance out your risk tolerance with the figures here and make sure that you're comfortable, because you can't do anything because anyone else says it, or else it doesn't matter what else. You just need to do what's right for you, because my investment thesis is going to be different than yours, and the reason I own something is going to be different than yours. And so I think if you do your own analysis, if you're comfortable owning companies out in China, and you believe the numbers, and trust them and to do the right thing. I think that over the long run, I think that currently those types of companies right now, at least the few that I've researched, appear very cheap. And so just make sure they're within your margin of safety and you're comfortable owning it. So I'll maybe do some research on this pretty soon. Maybe I'll do a video similar to Alibaba. We'll see if people liked it or not, or else I might just go back to the old format. But hope you enjoy the video, bros. Thank you.